Can a small plastic card in your pocket called a credit card is an instrument for earning money and helping you further your financial goals? After all, credit is an instrument to spend money. Then you can earn money using it and not just acquire credit. To know more about this method of income, stay tuned to this video. Hello everyone, welcome back to our channel. Glad to see you in this video again, because I've got something really valuable to share, my friend. What are the uses of credit cards, and what are their merits and demerits as a financial instrument? A credit card allows customers to pay that is issued to users to allow them to purchase from a merchant for products and services depending on their outstanding debt. The card issuer opens a revolving account for the cardholder and extends a line of credit which the cardholders can use to pay a merchant or get cash advanced. Customer credit cards and business credit cards are the two types of credit cards available. This is what is common knowledge, right? Credit cards are problematic because they offer the impression that you have money that you, however, do not own. Credit cards are terrible because they offer the impression that you have money that you don't. The second worst thing about a credit card is the exorbitant interest charges. You can acquire an education loan with an interest rate of 6% to 8%, a car loan with an interest rate of 8% to 10%, and a personal loan with an interest rate of 12% to 14%. These rates are possibly still expensive for the tastes of a few, but then you can estimate how much interest rate a credit card levies. Well, the astounding figure is that it takes around 35% to 40% annually as interest from your borrowings. You are paying such exorbitant interest rates, which should just plain and simply be illegal. If you're using credit cards and allowing your earnings to go through it at such interest rates, then you might not be doing a good job in terms of financial planning. How does a credit card help? Increase your credit score. The first method is to make sure you can clear your credit card debts as quickly and as completely as possible, which will help you keep a very good credit score. One of the best ways to improve your CIBIL scores is this method. The CIBIL score is a 3-digit representation of personal credit history. The credit history recorded in the CIBIL report, also known as the CIR or Credit Information Report, is used to calculate the score. A credit payment history spanning loan kinds and credit institutions throughout time is referred to as a CIR. When your credit score is good, then your credit score will remain good. The range from 750 to 900 on a scale, which starts at 0 and ends at 900, is the best place to be as it deems you creditworthy. Whenever you are taking a loan, your credit score will tell the creditor that you are someone who can easily repay the loan as you have in your history. So, it helps you get bank loans for umpteen purposes. The bank might be even ready to give you the loan at lower interest rates as they trust your readiness to pay the loans back. On the flip side, if you're taking a loan, your credit score tells the creditor that you are someone who doesn't at all repay the loan as you have in your history. Then it makes getting bank loans for a myriad of purposes equally difficult. So, the key is to make sure you end up being a person who pays his monthly credit card bill 100% to keep your credit score high. Then it is all about being financially smart and making sure you use the instrument in your pocket to be able to create a better position for you rather than making it your master. Number 2, rewards or offers. Expenditure on credit will allow you to get more and more privileges with the bank and the market. It could be a small sum of an Amazon gift voucher where you are gifted these perks as long as you are paying your bill as per condition numero uno. Number 3, free credit period. If you maintain the right amount of credit score, you will also get a free credit period for 30 to 45 days. Normally your credit cycle is for 1 month, so then you get 15 days at the end of each cycle depending on when it begins and ends to pay off the bill. This means adding the 30 days of a month, give and take a day, plus the 15 days of payment of the bill. Any expenditure on first day of the said cycle will mean you have 45 days to repay a loan from the credit card company, which doesn't require you any interest. Number 4, liquid mutual fund. Try and spend all your expenses in a month or on a credit card. Therefore, for example, if you spend monthly $10,000, then invest the same amount of money in a liquid mutual fund. It might give you a better return on investment. It also has no exit load, and the cost of getting the mutual activated will take you close to 0.1% of the total amount. Imagine you're earning 6% for the investment. In that time, you will end up earning $10,050, which amounts to a growth of $50. For a year, in the 12 consecutive months, you will earn 50 times 12, which equals $600, for no cost or interest or expense to start with in the first place before you have paid the income tax. Now imagine you are given a 2% cash back for your payment, then it will help you get $200 back, and which means your debt will be now reduced to $9,800. In a year, this will mean you are earning around $1,200. This makes your income when you spend your money worth $1 million. You will now earn with these steps around $1,800. Here are 5 credit cards that you can use if you're a beginner to take advantage of this method. Number 1, Discover It Secured Credit Card. There is no annual fee for this card. You'll also get 2% cash back on restaurants and gas stations for the first $1,000 spent, plus an unlimited 1% cash back on anything else. They're also having a promotion where they'll match your first year cash back. Not only that, but Discover also permits you to watch your FICO score on their platform for free, so you can see how it improves over time. Number 2, Petal 2 Visa Card. This one too has no annual charge, and your credit limit is determined by your banking history, which means you could be approved even if you have no prior credit history. They double as a personal finance app because they use your banking information to compute your payments, interest if you don't pay off your balance, monthly spending, and other financial planning and recommendations to help you save money. Number 3, Amazon Prime Rewards Card. If you obtain the Amazon Prime Rewards Card, you'll get a $100 to a $150 Amazon gift card just for joining up. And then you'll get limitless 5% cash back on all Amazon and Whole Food purchases, as well as 2% cash back at restaurants, gas stations, and drugstores. Then you'll get 1% money back on everything else. Number 4, the Chase Freedom Flex Card. First, they'll give you a $200 bonus if you spend $500 in the first 3 months on purchases. They'll also give you 5% cash back on bonus categories worth up to $1,500. 5% back on travel through the Ultimate Benefits portal, 3% back on restaurants and eating, 3% back on drugstore, and 1% back on everything else. Each quarter, earn 5% cash back on up to $1,500 in total combined purchases from multiple categories such as petrol stations, grocery shops, and certain internet merchants. When you book travel with Chase Ultimate Rewards, you'll get 5% back. Restaurant dining, including takeout and qualified delivery services, earns you 3%. Purchases at the drugstore will earn you 3%. On all other purchases, you'll get 1% back. Purchases and balance transfers have a 0% intro APR for 15 months from account opening, a variable APR of 15.74% to 24.49% after the intro period. As long as your account is open, your cashback incentives will not expire. There is no minimum for cashback redemption. Number 5, Citi Double Cash Rewards Credit Card. You'll have no annual fee and unlimited 2% cash back on everything. 1% when you make a purchase and 1% when you pay it off. Double your money back. Get unlimited 1% cash back when you buy, plus an extra 1% when you pay for your purchases. There is no annual cost for any of these services. 0% intro APR on balance transfers for the first 18 months. Following that, depending on your credit worthiness, the variable APR will range from 14.74% to 24.74%. Fee for balance transfers, 3% of each transaction, which is $5 minimum done within the first 4 months of initial registration. Following that, 5% of each transaction, which has a minimum of $5, is deducted. Balance transactions must be performed within 4 months of starting the account. Cashback is not available on balance transfers. Purchases are excluded from the intro rate. Interest is levied on purchases if you shift a balance. Unless you pay your whole balance, including balance transfers, by the due date each month, interest will be levied on your purchases if you transfer a balance. There you guys, this is how you can use credit cards to make no expense and risk-free income for you. Then we introduced you to 5 new credit cards that will help you use this system and at the same time have a better deal than others. Please don't forget to like the video if you find this info helpful. Please give a thumbs up and subscribe for more. It would mean much to us, and it also encourages us to produce more valuable content for you all. If you have a specific topic you'd like to learn, please leave a comment below and we'll work on it for you.